Hey all, welcome to ShareTreck. This is Raj here. Friends, this is the pre-market overview, and today I'm not going to go through all the standard pieces that we talk about, the stock market, price index and other things, but I have some salient points to make because of which I think today is going to be volatile and doesn't make any sense trying to read any patterns into any of those stocks. That said, let's get started. Welcome back, friends. Earlier I was reading an article that said that in the broader US market, a unique dynamic is unfolding. As the year-end approaches, investor attention has turned to hedging strategies in anticipation of the upcoming US election and the Federal Reserve's meeting. This is evident in the options market, particularly with the VIX, where the CBOE S&P 500 9-day volatility index, reflecting near-term volatility expectations, has surged relative to the standard 30-day VIX. This marks the highest ratio between short-term and 30-day VIX since March 2023 during the regional banking crisis. Despite these defensive moves, EOS equities were showing signs of resilience boosted by seasonal strength and share buybacks, potentially setting the stage for a post-election rally. If volatility decreases after the Fed and election events, investor overhedging could trigger renewed buying interest, supporting a more bullish sentiment as the year-end approaches. Now, all that seems to have changed because we had earnings from Meta and Microsoft, both of which were the darlings of the stock market, and high expectations were on them. I personally was having very high expectations on Microsoft. Microsoft shares declined over 4% in the late trading as the company offered a cautious outlook for the second quarter, pointing to decelerating cloud growth, tighter profit margins, and increasing expenses. This announcement followed the Q1 earnings call on Wednesday, where executives reported solid revenue growth and profit growth. However, forward projections cast a shadow over these gains. And the highlight was Azure, Microsoft's pivotal cloud segment, which is expected to see slow growth to 31-32%, around maybe let us say 32% this quarter, down from 34% in Q1 and slightly below the previous quarter's 35% rate. Microsoft CFO Amy Hood further explained that commercial cloud margins are likely to compress as capital expenditure rise in support of expansion in AI-driven services. Initially, Microsoft's robust Q1 results lifted the shares to a high of 444.95 in the after-hours trading, though they later adjusted closer to the regular trading of around 432.53. There is also another headline on CNBC indicating that Mark Zuckerberg was surprised by Meta's AI spending. Taken together, all of this raises a concern that potentially the theory that the heavy AI infrastructure investments have far outpaced the AI earnings, and therefore there may be a slowdown in AI infrastructure investments. This would lead to bearishness for Nvidia, in my opinion, because if these big spenders did not spend at an increasing level on AI chips and data centers architecture going forward, then Nvidia may also project a weaker quarter ahead, and the investors may anticipate that when Nvidia reports, Nvidia may project weaker quarter ahead, and therefore even right now we can start seeing a little bit of weakness in Nvidia stock prices as we go towards Nvidia earnings. I'm watching out for the next rate cut announcement from the Fed in November and here in Canada in December. And looking at the level of drop seen in pre-market in the indices, it does not make sense investing time making a stock by stock commentary. Let us just look at the pre-market situation. Dow futures are down minus 0.46%, S&P is down minus 0.75%, and Nasdaq futures is down 0.97%. Oil is up marginally. So I think that when the market opens, everyone has a decision to make. Are they going to decide that they are going to sell and take the profits, or are they going to dollar cost average? So if they start dollar cost averaging, then probably it will help the market move sideways, consolidate, and then pick up. If they decide to take profits, then this red is just going to become a little more deeper. There are a few other things that are making me have a bearish outlook. The Eurozone inflation rises to higher than expected 2% weakening case for jumbo rate cut. So the expectations are going to be trimmed again when it comes to the Eurozone. So that could also have a bearish impact on the market, at least momentarily. We have another heading out here which says Microsoft CFO says OpenAI investment will cut into profit this quarter. This could also be a forward-looking statement where they are saying that they're going to continue the same level of investment they did on AI infrastructure. So if we interpret it that way, then I think NVIDIA should not have any problems this quarter, the coming quarter, but the following quarter probably becomes a bit doubtful. So we'll have to see how the market interprets all this kind of information coming in. So I expect a lot of volatility today. There is this Bloomberg heading which says Microsoft shares drop on disappointing cloud growth forecast. Meta warns of worsening AI losses after sales narrowly beat. And these kind of headlines kind of put a bit of damper on our NVIDIA and semiconductor bullishness. So I think that all of us have a decision to make. Should we take the profits and sit in the sidelines? I've already done that with half of my holdings and will think selectively on whether to dollar cost average or profit take, depending on the counters that I have. I'm going to do that inventory taking today. And then the question becomes, what about the Santa Claus rally? Can a Santa Claus rally happen if Kamala Harris wins and we have a repeat of what happened in the last election? Will a Trump win trigger global tariff threat and constrain exports and boost inflation while we are just about recovering? There is too much noise and there are too many possibilities, and the oil market is predominantly dominated in US dollars. So if Trump wins and starts this tariff thing, will that change in retaliation, and what will that do to the strength of the US dollars? In other words, will the current arrangement of selling oil only in US dollars change? And if that does happen, what happens to the US dollars? The demand for US dollars will go down the size of at least half of the oil market that we have currently. And if the drop in that demand, is it going to weaken the US dollar? These are the deeper questions that need a lot of efforts to unravel. But as retail investors, we don't have the ability to do that. And at the same time, we cannot ignore these possibilities because it's going to hurt our pocketbook. It's going to hurt our portfolio value. So since we do not have the means to contemplate these possibilities, we need to watch out for large institutions and analysts to publish their outlook on these issues. So I'll be looking forward to a slew of articles in the next month or so, next couple of months, which contemplate all these possibilities and lay out what they see. So my friends, that's all for today, and you can see it doesn't make any sense going through all the stocks and looking at the price charts because anything can happen today. I'll catch up with you in the next video. Bye for now.